How can the U.S. Federal Reserve balance controlling inflation and supporting economic growth? That's the question on many minds today. In a recent policy meeting, the Fed's stance was clear. They're focused on a complicated juggling act. On one hand, they aim to control inflation. On the other hand, they're striving to support economic growth. While inflation remains a concern, the Fed seems confident that it can be tamed without putting the brakes on economic progress. Their belief rests on a delicate balance, a balance that hinges on the strength of the U.S. economy. Now, when we talk about economic strength, we're referring to factors like job growth and the resilience of consumer spending. The minutes from the Fed's meeting hint at a recognition that the U.S. economy might be stronger than previously anticipated. Continued job growth and persistent consumer spending could be the driving forces behind this optimism. But remember, optimism doesn't eliminate uncertainty. This balance is a delicate one, and the Fed's next steps are eagerly anticipated. News of potential rate cuts has ignited the stock market. But what are the concerns? With the prospect of lower interest rates, the stock market has been set ablaze with excitement and optimism. Major indexes such as the Dow Jones and S&P 500 have rocketed to record highs, painting a rosy picture of the economic landscape. Why is this so? Well, it's a general consensus among investors that lower interest rates are a boon for stock prices. But it's not all sunshine and rainbows. Some economists are casting a shadow of skepticism over this bright outlook. These naysayers argue that the specter of inflation might prove to be more stubborn than anticipated. They worry that this persistent inflation could potentially force the Fed to toss aside its rate cut plans and, in a swift turn of events, raise rates again later in the year. This juxtaposition of market optimism against economist skepticism creates a fascinating dynamic. It's a tug-of-war between the buoyant confidence of investors and the cautious prudence of economists. The debate continues, with the market optimistic and some economists skeptical. So, what's next in this economic saga? Well, all eyes are on the upcoming Federal Reserve policy decision. This key event is slated for May 2nd, and it's here that we might see the first indications of those potential rate cuts. However, it's important to note that the size and timing of these cuts are still up in the air. The Fed, ever the careful navigator, will likely tailor its strategy based on the latest economic data. But this isn't just a story for Wall Street or Main Street. The decisions made by the Fed send ripples across the globe. Whether you're in Tokyo, London, or Sydney, the shifts in U.S. monetary policy can impact your local economy. It affects everything from the cost of borrowing to the value of your currency. So, in a way, we're all spectators in this grand financial theater. As this story continues to develop, the world watches closely for further updates and decisions from the Fed.